Hello and welcome to the latest focusIR CEO interview. I'm joined by Steve Quah and he's the CEO at Aeorema Communications. They are a specialist high-end events and marketing company. AEO is that rare thing, a profitable growth company with some cash in the bank who've just announced record full-year profits and increased the dividend by 50%. So welcome, Steve. It's great to speak to you today and congratulations on having such a strong financial year.
Great. Thank you very much, Donald. Yes, been another amazing year. Thank you.
Yes. Before getting into the detail, why don't you give us an overview of the business for those less familiar?
Yeah, sure. I mean, he's quite a nice intro, by the way, Donald, as in you detailed some of the things we do. But so Aeorema Communications PLC is obviously the top co, but we have two brands in the space of live events. And that's basically where brands want to connect with an audience. In our world, we run a company called Cheer for 21st, which is the mothership agency and an event for Cheer for 21st. That has offices in London, New York, Amsterdam. And we put on conferences, exhibitions, brand experiences, create lots of content and video, and it's basic connecting audiences. That's in its simplest form. And an event for is our sister agency that specializes again in the same sector, but more around venue search, incentive travel, and smaller kind of boutique meetings. I guess under that umbrella of live engagement is what we do.
But you're quite high end. Why don't you just give us two or three of the companies you work for?
Yeah, we are. We're glad you said that, Donald. We are fortunate that we have a client list to die for. Global FTSE companies, NASDAQ listed companies. And we find ourselves in kind of three or four main sectors around ad tech. So Google and YouTube are one of our main clients in the ad tech space, plus a plethora of other names that people probably wouldn't know in the ad tech space, but turn over billions. And professional services, we work with some of the big consultancies, some of the biggest legal firms in the world. And in the media, News UK, Wall Street Journal, and that kind of publication piece. And in between that, kind of a spread of other kind of technology brands. So we find ourselves in great company. And yes, we do very high-end, very strategic engagement and communications. If we want to get into more of the marketing speak, we're led by strategy and we consult our output to live events. So we're not a pure production company. We do lights and AV as part of it, but it's actually around comms, content, and the reason for why you're doing the event.
I understand well. It's your full year results, Steve. If you could run us through the key financials, please. That's always a good place to start, isn't it?
Well, yeah, I mean, as I say, another record year we had another record year last year, but we've just nudged over 20 million in revenue. That's a 66% increase in our turnover. Profits are up for the first time to seven figures, just over $1 million, which is remarkable. And as you say, we continue to increase our dividend policy to be 3p a share. And kind of going back to the overall picture as where we are in the AIM market, we're established, very profitable, are growing, have cash in the bank, and are actually pretty undervalued in the market. But our strong, robust financials just prove the quality of our client mix, the quality of our team, and where we're going as a business going forward in the industry.
Okay, let me talk you through the revenue model for the business. What's the sales cycle? What does the cost of customer acquisition look like? And talk us through repeat revenues that you know you can depend on.
Yeah, that's a very good question. So the kind of the sales cycle and the type of client we want is basically, first of all, we have a very strong sales and marketing function within the business. We have invested in that with a very strong team. Our marketing is effective. I have a sales team that can bring a business, and more importantly, we can close deals. So that's a cost center within the business, but fairly reasonable. The cycle in the project is that the typical client for us is that we are engaged, one, for your procurement strategy, so when we get approved. We tend to be known as a tier one approved agency. So therefore, once you're in with a big brand, you are an approved agency to get work given to you, but you might have to pitch for it. The next thing is actually there'll be a calendar of events. And where we have moved forwards and where the success is for our business is we've gone from a very sort of ad hoc project by project approach to we engage with the brands. We're looking at the 2-year program. There may be a multitude of events within that program. And we are looking at how we communicate that strategy across all their program in the live event space. So that is part of the success of going forward. Generally speaking, we keep all our clients. I think we mentioned in my CSM, we have a high retention, as in 100%. If we do an event 1 year, if it's an annual event, we will probably know already that we're doing it next year. And to give you some sort of shape and size around our retention stroke new business number for the year. Probably 80% of our revenue is probably already repeat business or booked, and 20% is net new clients or new projects we don't know about. And then within that mix, some of those projects that we keep are every 2 years. So that gives you some idea. The major effort as an agency has to be pushing to get a relationship with a client that's beyond the next 3 months. That tends to be the way in the events world, and that is paying dividends. Layered underneath that is that we've invested in our account model. And when I say about that, our key accounts have an account director and account manager. Their sole purpose is to maintain one level and grow the business. And again, that's paying. That'll give you sort of some color to our business.
Oh, no, that's very helpful. I understand your gross margins are around 20%. So are you happy with those? How would you hope to grow that gross margin number?
Yeah, I mean, our gross margins are less as a ratio than it was probably the year before, but I do need to point out that we've massively invested in our business. We've opened up in America. We have tripled in size in probably 24 months. We've invested in our back end, our IT systems, our HR function. America is a big growth place for us, where we have moved from a satellite office to a more full-time kind of team there. And despite that, I need to point out that our net margins are still above average for the industry, despite that investment. But yes, we will see hopefully benefits of that investment paying off. I would say there's going to be a period of kind of more consolidation. We don't expect to do those sort of one-off costs that maybe we had over the last year, and they'll start paying dividends. And I think the model we set up for is that we can increase revenue pretty dramatically without increasing our kind of core base now. If you can imagine, we went from a small head count to 70 plus. That's been a massive change. So I think credit to my management team to manage that process and maintain sales and keep winning awards. And yes, absolutely, we are focused probably more earnestly in the next sort of 12 or 24 months about what the commercial model is and fine-tuning that. But again, I repeat, despite being public, despite being having an overhead, we are above average in our industry for our profit margin. Okay,
let me come back to America in a moment. What's the rationale for raising the dividend by 50%? There you go. That's my last financial question to you.
We think there should be a policy of increasing dividends as we grow. We have an amazing selection of shareholders who have been very loyal and diligent, and we think we need to reward them. Also, we think that attracts interest in the industry, and we're quite proud of the fact that we pay dividends. And underpinning that just shows our confidence going forward. And it's something that also rewards people who live in my firm because we are all shareholders. So it's a healthy thing to do. And we will continue to have a policy going forward to reward our shareholders. I think it makes us stand out, I think, in the AIM market, from what I'm told, as in we're profitable and pay dividends. That's not the common norm for a lot of AIM companies at the moment. And we have lots of cash in the bank. And fundamentally, we're undervalued again.
No, you do sound like an interesting and an unusual AIM-listed company. Putting on sophisticated marketing events for clients like Google, YouTube, and Wall Street Journal. It sets you apart, really. So, why don't you tell us what the growth strategy is? Where are you going to grow the business?
Well, I've touched on two kind of fundamentals. The approach to how we manage our accounts is quite key. The fact that we built up a robust account management team, for want of a better word, to maintain accounts going forward is paying dividends. The fact that we have a really strong sales and marketing team to grow the business. But going back to the question, big part of it is America. So, we dipped our toe in America in the middle of COVID, a brave move, very bold. It's paying off very well. And we have shifted from being hanging a satellite name on the door to a proper office in the Rockefeller Center with 7 full-time staff. And that is potentially going to be bigger than the UK office. Just to give you some semblance of market size, simple terms, UK/Europe, the markets in our pools are deemed to be about 40 billion, so we're getting a small piece of that. In America, it's triple. It's 120 billion. So therefore, we see massive growth potential in America. We continue also to grow in the UK. The net new clients that come in are strong, and I'll go back to there's the fundamentals that we have established now. It's no small feat to have a great sales and marketing team that actually is effective above and beyond, someone doing a website blog. it is generating sales. And I think, I'm not sure the type of work that will come in, but we are seeing the relationship piece growing. And what we're saying is that we're now looking at clients that are talking to us about their live experience, the internal comms meeting, presentation, they need lots of video for training. That's coming out of it as well. So there's a nice mix of work. And I think it's also a good point to make. No earlier questions like how we've ridden out, outside, it's been pretty hard economically, lots of issues, lots of challenges in the poly crisis. To several reasons. One, we have a nice spread of clients in different market sectors. Okay, so it's slightly de-risk the fact that we're not all in one entertainment sector or one particular sector. The events we do are called within our clients business critical. And business critical means they have to happen because it's a sales function or it's a communication function to their team. It's not a nice to have party or a consumer event, which is not, we don't get into the role that world. So therefore, we will maintain that kind of growth going forward. And there's a need for that within the business. And as we get more involved and our reputation spreads, we tend to, if you put us in front of a client, we tend to get a brief out of it that easily, which is quite amazing. And the quality of our products is outstanding. And the fact that we win lots of awards is not to be sniffed at. And I think a step change again for us this year is that we do very well in our kind of industry sector awards. We won the best of the awards and continue to win those. But I think as we announced, to be nominated for 5 awards in the Drum Awards, which is the bigger, more marketing and advertising world, is actually recognition for where we're going as a business going forward. And just to underpin all that, the key thing is the word strategy and consulting. We have moved to where we have conversations with brands and clients to talk about why they're doing an event, how they're going to do events, and the rationale and logic behind those, as opposed to, you want an event, it's going to have 500 people and it's going to look great. We're here. And therefore, those conversations are very sticky and very lucrative and also puts us in control of our destiny.
Okay, very briefly, just answer me very briefly this one. The ROI on America, what do you think your returns might actually be there?
I think, as a percentage, it's probably around 25-30% of our revenue at the moment. Yeah, we see that rapidly increasing. As I say, the return on our investment is the quality of our projects and the conversations we're having with brands that's happening now. The mission for America is to have American clients on American soil for American brands that don't involve the UK relationship. Yeah, the mothership's back here. There's resource, and that's our future. And I think it's very early days yet. And to the point I said, we believe it's going to be much bigger than the UK in the long term. And I think it's also for people to know, it's quite a tough market too. And I think credit to our team, because there are British companies who think they can conquer America. It is not that straightforward. It's different language, as in terminology, different buying cycle, and different kind of commercials, which we understood that because we had some insight, hence why we employed an American president to kind of answer that question. And it's really starting to show results going.
So what do you think the Aeorema business might look like in a couple of years' time, Steve?
Loads of awards. Bigger, better, better. I mean, as a forecast, our ambitions to grow, we can continue our momentum. I think along that journey, there's always an M&A question. More will be acquiring. I foresee the fact that we may have another geographic location. Maybe more the fact we might be on the west coast of America as well as the east coast. And to kind of be a dominant agency within the industry as we're becoming.
Okay, you're clearly a creative who enjoys his creative life. All well and good, but why should investors put you on their watch list today, Steve?
Well, the proof's in the pudding. Obviously, our journey so far, if anyone knows and has seen and followed us, the momentum will continue to grow. Fundamentally, I believe we're undervalued. And, we are dividend paying, and I think we're a bit of a secret. I think we're a bit of an unusual kind of beast, hence why we're having this conversation. And we will continue to grow, and we expect our share price to go up accordingly. And and our dividend policy. But ultimately, we're a great investment vehicle because I think we're just really starting the next phase in the journey. I think our chairman mentioned that we kind of hit our targets. We had an internal revenue target that we hit early. So again, the growth trajectory and the fact that we're established, profitable, continue to pay dividends, have cash in the bank, makes us a very interesting investment going forward. And I think we're just starting to get public around it, and we're creating lots of noise.
Steve Quah, thank you so much for joining us today, and that was really interesting. Thank you so much. I really enjoyed that. Thanks for running us through the AEO business, and we hope to see you again in the future. Of course, repeat business. For more, as you mentioned, for more company information and to access the company bulletin boards, please go to the Aeorema Communications pages on London South East. And meanwhile, do follow us on Twitter. That would be @_focusIR_ or also @London South East, 2 Twitter accounts, or register on London South East YouTube to receive alerts to our next AEO interview. All that remains for me to say is thank you very much indeed to you for watching.